the basics of collateral, right? And the importance of it in the home process is it really dictates and determines how much you can borrow. Would you agree?
Yes, sir. Yes, sir. That loan to value amount is really impactful with the buying power, if you will. So the lower that loan to value amount is, the greater your buying power. Very simple.
Very simple. So whenever folks call us out of the blue, it's so funny, right, Tev? How you doing today? I'm fine. Okay, I want $500,000 and I'm a great guy. When can I sign? It doesn't work like that. So that's why you guys got to go back and check out the first two C's, the credit, right? And then the
Mhm.
capacity portion. But we're going to really button it up today because as my OG manager told me, it's all about the collateral, baby, right? It's
Yes,
about
sir.
the value of the property and how much skin, that's what we call it, how much skin you have in the game,
Oh
right?
yeah. Oh
And,
yeah.
and, and as Tevin said, those things dictate or determine what your loan to value is, loan to value. And I'm going to slow it down a little bit because we don't want to have mortgage jargon or mortgage ease. But give us one of them educated, simplified explanations of loan to value, Tev. Speak to me. You know, I read on a fifth grade level. Talk to me.
Oh yes, sir. Let's talk. So I actually have a client right now. We discussed going FHA.
Hmm.
FHA obviously requires 3.5% down,
Okay.
therefore making the loan to value out of 100% 96.5%.
Okay.
All
Okay.
right, so that 3.5% down is going to make it a 96.5% loan to value, if you will. The customer wanted to bypass mortgage insurance.
Mm.
He said, "Hey, I have money of down available. I do not want to pay mortgage insurance." So, because you can't get rid of the mortgage insurance on, let's say, an FHA program,
Hmm.
his credit was good enough to go to conventional, and because of his 20% down,
Hmm.
therefore having an 80% loan to value, he was able to bypass said mortgage insurance.
Mm. I love it, man. So what you're telling me, if I heard you correctly, two things. FHA loans always have the private mortgage insurance. Is that what you're saying?
Well, it's called mortgage insurance premium, but it's the exact same thing.
Okay.
Yes, so they do carry that for the duration of the loan.
But regardless of how much I put down, I'm going to have it.
Correct. Correct.
Okay. So you switch to conventional. And then if my spotty senses picked up my fifth grade acumen, right? Sounds like minimum you have to put down is 20% if you don't want the, what is it called for conventional?
Private mortgage insurance.
Private mortgage insurance,
Yes,
right?
sir. Yes, sir. So that is absolutely correct. You do have other ways to get out of it that you don't have to put the money down, but it is
Okay.
still based on the loan to value. It just means that you get to what they call 78% of the loan to value, to where they will then forfeit the mortgage insurance for the conventional product.
Got you. Got you. Okay. So I love it. I love it. So there you go, guys. Because I get that question a lot. I don't want to pay private mortgage insurance because I was somewhere on the internet and they said I don't have to pay it. Okay.
Hmm.
And let's do this while we're there. We'll go out of order a little bit. Okay. But no, we won't go out of order. We'll get to it here in a minute. But remember to remind me to mention what I was going to say about private mortgage insurance. Okay, Tab?
Bingo. Yes, sir.
There it is. There it is. Okay, so now that we understand loan to value, because that's a huge part of this process. Okay. Again, credit's good. We showed you have the ability to repay on time every time. Now we have to go out and assess the value of this home. And I
Hmm.
don't know about you, Tevin, but a lot of times I get folks with this exact. I'm gonna try to uh, uh, do a impression of a client that I just had.
Okay.
Why am I paying for the appraisal? Right? They want to
Right.
know why they're paying for the appraisal. And for somebody that doesn't understand, it makes sense, right? Because we're the lenders, we're lending you the money. Why
Hmm.
should I have to appraise or as a customer pay for the appraisal? And my response to him was, it's because it's your loan. Okay. Because here's the deal, as a lender, as a business person, what if I go out and appraise this property and the house doesn't appraise and you just walk away? How long am I going to be in business?
Oh, not long at all.
Not long at all. So,
Not long at all.
not tongue in cheek. I don't know about you, but do you ever get any pushback about the appraisal and who pays for it?
Frequently, frequently. We try to discuss all of the things you pay for before closing.
Hmm.
and understand that that's part of the loan. So even though you pay it, you won't pay it twice. So it'll be credited in the grand scheme of things. But like you said, it's your loan. If
Right.
the appraisal comes back light and you can't negotiate a different position with the seller, then you have the freedom to walk away at some point. But that doesn't mean that we can operate that way as a business. And you're absolutely right with that.
And that's the best explanation that I've ever been able to come up with, because it's a business at the end of the day, right?
Yes,
And
sir.
so, but that said, I love what you just said. There's a point of renegotiation if and when you have the right professional. Let's say that we got to throw that out there.
Yes,
But
sir.
let's say you assume you do, and say that appraisal comes back in that example that you just gave earlier, $100,000 purchase price. That's the agreed sales price, but
Hmm.
the house only appraises for 90,000. You said that, hey, as a buyer, you potentially have the opportunity to come back and renegotiate. Go into that a little bit for me.
Yeah. So we can't loan you more money than what we find out the house is worth.
Mm,
So essentially, if it's only worth 90, the seller has to be willing to say, "Hey, we're going to sell it for 90," and then we renegotiate those numbers and do your loan based on what the home appraised for. Um, and that's really that. I mean, if it goes under the amount, then you have equity, which is always great, right? But
right.
we can't give you more money than what the home is valued at. And once we have that appraiser go out there, that number is powerful, and
Powerful,
everything is
powerful.
based on that.
Powerful. And perfect segue. The person, the professional that comes up with that value, first of all, they're licensed,
Hmm.
okay? And they're called an appraiser per your last statement that you made. In the last statement you made, you mentioned appraisers, right? And
Yes, sir.
so they are tasked with going out to assess the value of said home that you're looking to purchase, okay? And a couple of things here. Back in the day when I first started, I could and I had a cadre of appraisers that I could pick up the phone, just like you, Ted, right? And I'm like, hey man, I need you to wobble wobble.
That's a
You
lot of
feel
power
me?
you had, Rob. That's a lot
Yeah,
of power, man.
yeah. Now I know you guys think this is cap, right? But that's why I'm around today, because to whom much is given, much is required.
Mhm.
And I wasn't a part of none of them shenanigans that was going on, but there was a whole lot of shenanigans going on.
Oh yeah.
You,
Oh yeah.
especially over there where you at. Don't say where you at, but especially over there. Just look it up. Had a whole lot of folks still in jail right now, right? Because in
Yes,
order
sir.
to commit mortgage fraud, it's a three-piece. You need the lender, you need the appraiser, and you need somebody at the title company.
Oh yeah.
And it's funny, that's one of the one of the three pieces that we're talking about here to even talk about collateral, right? Because we're talking about us, the lender. Now we're dealing with the appraiser, and we're going to mention the title company here in a minute, right?
Hmm.
But that said, long and short, the appraiser is the one that determines the value. And now, because of what happened in 2008, do we don't order the appraisals anymore one to one? What process do we go through, Tab?
Oh, we have to go through an AMC or an appraisal management company, so we don't have direct access to the appraisers because it gives us too much power. If we tell them we're trying to get a loan done for a quarter or 250, and that home doesn't appraise, we're like, "Hey, man, give me this one. I'll look out for you on the other side." You're doing bad business, and we need to have all of these comps and things of that nature. They need to be accurate and done at a very high quality level, and it needs to be done above par at all times. And yeah, the AMC gives us the opportunity to keep it clean.
Yes, yes. And there have been, and I've experienced, just we want to be honest. If you feel like your home value was not represented correctly, there's I always going to mention the CFPB, Consumer Financial Protection Bureau.
Hmm.
That's the government agency that is designed for us as consumers in several areas or entities. But if you ever feel like that's the case, you can always reach out to a realtor to get what's called a CMA, a comparative market analysis,
Hmm.
if you feel like you've been wronged in an area. Because we've heard stories, and again, I'll say it again, I'm in the business, and it was tried on me because of where I live, but
Hmm.
it didn't work, right?
Yes, sir.
Because a lot of these folks that are around, sometimes they have what they called, what is that? What kind of bias am I talking about? Um, uh, it's like an unconscious bias, right?
Hmm.
You do things unconsciously. So unfortunately, sometimes that happens, but typically the AMC, the appraisal management company, not typically, but it was designed because of fraudulent activities in the past.
Yes,
So
sir.
it removes everybody. So the appraiser can go out and look at the location, size, condition, and the comparables to the home that you're buying so that the lender could get the best accurate value to represent that home.
Yes, sir.
Agree?
No, that's the perfect idea of in the concept of what the AMC does and how that process is supposed to go.
Yes.
And just to go a little deeper on what you mentioned, Rob, I've heard it. The appraiser comes out, uh, got a couple ethnic things laying around the house.
Yeah.
Values tend to drop a little bit. It's
Yeah.
not fair, so just be mindful of that. As Rob said, the CFPB is our best friend in the consumer area. They can protect us in the realm of that. So
And here at the home show, we always we lead with the mindset of you doing what's right.
yes,
But if you step out of line,
sir.
we're gonna get in there behind. Let's
there
move.
you
Let's
go.
let's move forward, my brother.
Hmm.
So with that said, man, another part, that three piece, we're talking about protection of the collateral, right? And one way that you, the borrower or potential borrower, and the lender is protected is when we use things such as homeowners insurance, right? And
Hmm.
more importantly, to back it up a little, well, no, it's the same thing: homeowners insurance and title insurance, title searching, right?
Hmm.
I'll let you handle the property insurance portion, and I'll try to delve into the title portion, Tim.
Absolutely, absolutely. So with homeowners insurance, very simply, we're trying to protect the asset. The asset in this regard is the home itself. So we have in the South for sure hurricanes. There's a plethora of other things that could happen to your home, but we want to maintain the home's value as best as we can. And the way that we do that is by protecting the homeowners insurance. We got Allstate, State Farm, different companies like that, USA. They're going to protect your home for you in the case of an incident that could devalue the home. We're talking about things like your roof, any issues that would happen with waterways or leakages, things of that nature. We want to make sure the home is always indemnified or make you whole so that the home is always at tip top value.
That brother said indemnified.
Uh-oh.
And you did, and you said it the right way, man. I'm just jealous, boy. I'm gonna be like you one day, man. It's
Come
in
on.
here, it just doesn't come out like that. So
Oh, man.
you know what? That's why I'm gonna stay in my lane. That's why I got you here. So beautifully said, man. Beautifully said. Title search on the other side. All we're trying to do is convey that I can sell Tevin a property, right? And there's nothing in between he and I to perfect the title, the deed from passing from me to him. Okay. Now, when there's a lender involved, especially in Texas, right, you actually get a copy of the deed
Hmm.
and there's a mortgage note filed with it. But the deed is your home. And Texas does a lot of things to protect homeowners, such as, and you might not think it's a good thing, but if you wanted to refinance and pull cash out of your home, you could only borrow up to 80% of the value, the appraised value of your home. And you might not think that's a good thing, but that's one of the reasons we're a very, 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 very strong state. You know what I'm saying, Tab?
I like it. Yeah, they do that. They max out that refi because a lot of people just go crazy with it. Hey, you know what? I got access to 60 grand. I'm gonna grab all of it. It's like, no, no, you're not. You're
Yeah.
gonna get 80% of that, and we're
Yeah.
gonna keep some of the equity in the home and keep
Yeah.
this thing rolling forward.
Yeah. And a lot of times we need some protection, somebody to protect us, right?
I
Because
agree.
when things get into a situation, we always feel like we might be able to do this, that, or the third. So, one of the things that makes Texas strong, right? Now, another thing that is should be on the forefront of a lot of our minds, the way that home ownership and certain loan types can protect not only the lender or servicer or end investor, but as a homeowner, is the forbearance programs. During the pandemic, if you don't own a home, if you had student loans, if you had private student loans, you ain't getting no CARES Act.
Hmm.
You had to make that payment. Just recently they had a big faux pas. All these folks trying to be the first one to run out here and do some headlines, but the 40-year mortgages, those aren't forward mortgages. and that's in essence a forbearance that the administration put into place to help those that are struggling to restructure, modify mortgages for servicers, things of that nature, and stretch that payment out for 40 years so that folks can stay in their homes, right? And these typically happen or are associated with government entities, GSEs, Fannie Mae, Freddie Mac. Those are quasi government agencies. And then USDA, FHA, VA, right?
Right.
So these are some of the other ways, right? Lenders can protect themselves and or you can be protected as a homeowner. Make sense?
Yeah, it makes perfect sense, man. I saw that 40-year mortgages in the headlines, and I'm like, I don't know how I feel about it. It makes sense, but it's also, man, you're just that much more of a commitment. And yeah, I'm still tossed up in the air about it.
Well, what I'm saying, Tevin, is that's what y'all say. That's cap. There is no 40-year mortgages.
Right, right,
Again,
right.
these folks are running out. And this is another reason folks are confused.
Hmm.
And when we talk to folks, we have to give them the truth of the matter,
Right.
right? If they'll listen. But again, the headlines, they had a couple of news outlets that ran with it saying
Hmm.
that they're going to have new 40-year forward mortgages. That's not the case. And the forbearances for 40 years, that's been around. They had some 50-year type restructuring back in '08 through 2010.
Oh wow.
That's to keep people in their homes
Right.
so much so, well, not so much so, but because of that and the lower inventory that we have, you're not going to have as many foreclosures. That's all more the reason folks need to be educated properly and get into a home when you can, if you can afford it.
Yes, sir. Yes,
Yeah,
sir. Agreed.
yeah. So, I think we hit that in the head. Last thing that I want to talk about, from a collateral standpoint, is your down payment. Okay, and Tevin, you mentioned it a little earlier, but not only the value of the home and what the lender is willing to lend you, right?
Hmm.
But if you have more skin in the game, to your example, putting 20% down opposed to 3.5% down, you most likely, all the things being in place, will have better loan terms, right?
Absolutely. It's less risk to the lender, and all of the lenders operate based on risk. So the less risky, the more favorable your loan terms are going to be. I do
Exactly.
want to throw a pin in there real quick, Rob. You said to mention PMI before we finished up. You were going to mention something about PMI.
And I appreciate you bringing me back. There's a negative connotation with that insurance,
Hmm.
but think about it and do a little history. Trust me, but verify. At one point in time, you did have to have 20% to put down.
Hmm.
So just imagine today, all of the folks over the last 5 years or whenever you purchased a home, just think if you had to save up to 20%, right?
Right,
So
right.
this is the only mortgage market on the planet for whatever reason. What I'm saying to you guys, let me look in the camera. You're blessed.
Hmm.
And at any given point in time, the best percentage is about 63% of Americans decide to be homeowners. It's just like this. We all know somebody that can't keep a job, either in our family or somebody we know, right?
Hmm.
Well, unfortunately, or the scripture says this, the poor will be with you always. There always going to be some poor folks,
Hmm.
right? There's some folks you don't want to work and you don't want to work with them. And
Hmm.
there's some folks that will not be home buyers. We're not talking to you guys. But for those that are sitting on the sideline trying to catch a falling knife, time in the market, because you're listening to bad information, such as what I mentioned a moment ago, news outlets telling you there's a 40-year mortgage, which that's not the case,
Hmm.
right? There's just all this information out here and it causes analysis paralysis and it causes you not to move. Well, in fact, if you look at the data over the last 5 years, home prices have gone up every year.
Absolutely.
In 2 years, we had a 40% run up.
Hmm.
And so we're giving you this information, we're slowing it down just to help you get over that hump and get in the game. But the reason I mentioned private mortgage insurance is because of that. There's a negative connotation, but just like the forbearances and things that I mentioned, hey, that helps you leverage.
Hmm.
Got to look at it the wrong way, right? Poor folks, they get in debt. Rich folks, they leverage,
Oh
right?
yeah. Oh yeah.
Okay. So we need to stop leveraging tennis shoes and cars but we need
Preach,
to
brother.
leverage real estate. And
Preach.
that's what I wanted you to. I don't want to go too far.
Oh no, I love what you said about it because based on the history you just gave us with the way that mortgages were before, you were tied down to that 20%. That was a barrier to entry. So if you didn't have that kind of collateral saved, you couldn't become a homeowner. Well, now
Right.
with USDA products, VA products, and then FHA with the 3.5% down, we've we've gotten more opportunities for more people to become homeowners and take advantage of what's known as the American dream. And we've seen that dream at peak capacity over the past couple of years with home appreciations, people buying in at a certain price and then having equity almost instantly. So I think in that regard, private mortgage insurance premium slash is a great thing. It just gives you access to borrow more money than you would have had access to because you didn't have the proper collateral.
Amen. Amen. And partnered and when you partner with the right team, there's always strategies to get you in. I look at FHA as a bridge, Tev.
Yes, sir.
Okay. It gets you in the door. Then there's a reason we had to go FHA. More times than not, it was some type of challenge with credit or what have you, right? Or that's just where we started. But
Right.
that's not where we need to end. So, guys, what folks that we talk to a lot, and what I see the largest barrier is this: you think it's a home run. We hitting singles and doubles.
Hmm.
Those are the ones that makes the most money, right? Everybody likes the home run, right?
Hmm.
But we want to have a 300 batting average. They make millions of dollars.
Oh yeah.
So get in the house, stay with your lender, strategize, right? When terms come where you can reposition. But as I said to you, and you've seen on a lot of my prior videos that I've done before we came together, Tev,
Hmm.
you know, got folks in 18, 19 with the concept of I'm going to fix my credit, and it never gets fixed.
Right.
Then
Right.
then 20, 21, 22 comes in when the bottom falls out and we can't refinance.
You're not in position. You're not in
See?
position to take advantage.
So that's why we always drum the basics. We were on credit for 3 weeks, right?
Oh yeah.
And then capacity. And this is why, because we want you guys to grow.
Hmm.
Okay. To grow. So I think we hit it on the head tonight, man. What do you think?
I'm excited, man. I really feel like what we've talked about over the past few weeks with the 3 C's to home ownership, if you follow the series thus far, you're in a better position than you were, let's say, in March. You have a better understanding of what it is that your lender is going to need. And you also have a better understanding of gauging where you are as it relates to credit, your capacity, and then what you have saved and in order to, put down on the purchase of your home. So I feel like for the listeners that have followed us through this path, they're in a better position. And when they're ready, then they'll be able to take advantage of the information we've shared.
There it is, guys. So we want to thank you for listening to our audio cast or video cast, because we don't know how you're watching, right?
Mhm.
And we hope that you have found this information and the prior episodes helpful, right?
Mhm.
So we would cordially invite you to join us each week, or as long as you need to, as Tevin says, right? Uh, and on our next episode, watch this, guys. We're going to be talking about documentation,
Oh yeah,
the
it's back.
dreaded D. but
Right.
we going to break that thing down, guys. We're going to break it down. So, Tevin, for Tevin and myself, our time is up, but we thank you for yours. Guys, this is something that we always say. We say, let grace abound. And Lord willing, we'll see you again on the next week. Peace.